Hello and welcome to this video. Today I'm going to be doing a stock analysis on Apollo Global Management. Now, as you can probably see for the day, Apollo Global Management is doing poorly, and that is every single stock today, basically, because what is today? It is Liberation Day. As you can see, it is the 3rd of April 2025, which is the day that Donald Trump imposed tariffs on basically the entire world, so a lot of stocks are having quite a bad day. And you might think, well, why do I want to highlight this today? And that's because it is a private equity firm, and I want to highlight it because basically every single stock is a lot cheaper now, which means a lot of companies who have geared themselves with their stocks towards loans and interest rates are probably also going to increase in the future, which means that is a prime spot for private equity companies to buy companies or buy large positions in companies, which then have an upwards trend in the future. Now, Apollo Global Management is going to survive by far, and chances are, if they can get in a lot of companies quite cheaply, well, then what's going to happen to their equity? Well, it's going to increase rapidly. Now, I like Apollo Global quite a lot. I'm just going to show you why real quick down here in the earnings. Income statements from 2020, revenue 2.4 billion, 2024, 26. They 13 times their earnings in 4 fucking years. That is insane. As you can see, they in 23 they did quite well. They are by far my favorite private equity firm. I do own quite a large share of Apollo Global stocks because they are just personally my favorite also private equity. Also because one of their main holdings is in Athens Insurance, which is also a pension company, and I think it is one of the better pension companies, just the way that they operate. So I do like them in total. Now, as you can see, the earnings, they did quite poorly on their earnings earlier in the year. In 24, as you can see, minus 3.6% and minus 7%. That's quite unfortunate. But then we see here up by 7% and up by 17% in the end of 2024 in Q4, which is quite nice. And they are guiding a bit higher by 4 cents in Q1 and 25, which is coming in a month. And I hope they're going to beat it, of course, because I own some. And I also like that they pay out dividends. And they pay out dividends twice a year, as you can see in February and in November. And no, I mean 4 times a year. So November, February, May, and August, they are paying out dividends. Now the dividend payouts is quite decent, at least 1.3%, and it's 4 times a year. Now I know a lot of companies have much better, but the fact that they pay out 4 times a year, what does that mean? Of course, that means you can then reinvest them. So I would much rather have a 1.3% 4 times a year than a 1.5% at the end of the year, because chances are then my investments are going to increase because of the snowball effect. Now, if we take a look also at the graph, we can see that recently it has been performing quite greatly. If we take back in May in 23, it was at $58 and it has just risen ever since. Now we do see some slight hiccups like this one here, where it tanked quite a bit on its earnings, where they were down by 7%. And often when a private equity is down on earnings, that might be because, say, they bought a company, they expected to flip around for a profit or a lot of money, and they estimated that earnings, let's say they didn't sell the company or just couldn't get as much from the parts of the company that they wanted. Because that is, of course, the primary way that private equity firms earn money. They buy companies, they then take in the profits, or they buy them, make them more profitable, and flip them, and so on and so forth. Or they sell out. Let's say they buy a company that sells a fast food chain that owns several different chains. Say one sells burgers, pizzas, and tacos. If the one that sells pizzas and tacos is much more valuable than the other ones, well, chances are they are gonna keep that and sell the other one off. So yeah, let's delete that random line. So yeah, that I like. That is of course the way they make money, and I personally just like the way Apple Global earns their money, and that's just the way they manage their money. I think it's quite decent. Now, if we take a look at their seasonals, if we go all the way back to 2011, as you can see here, some other times they lose quite a bit of money, or sometimes you earn quite a bit of money on them. Now, we have 6 negative years and we have 9 positive years, which means that 50%, well, 66% of the time you are gonna earn money. And as you can see, we only have 1 year with bad returns, but we have many years with great returns. So yeah, of course we also see greater losses, but these was in 14 and 15 and 11, so that's quite a long time ago. But recently, they have just been performing insanely, and I like them quite a lot. As you can see, in 24 last year, 80% up, really picked up the pace at the end of the year. Now, there might be some hiccups given the fact that, of course, the interest rate might be rising due to inflation. And that, of course, can be a problem for companies that are in private equity, as they, of course, have some debts because they are going to leverage themselves to buy companies. But chances are they're going to get better interest rates, and the banks aren't going to default on their loans because, well, chances are they're going to have more debt that the bank, they of course want to see that in return, but chances are they are going to leverage other companies' debts even more than their own. Now, if you look at technicals for the day, as you can imagine, it is a sell, but for the month, however, it is neutral here and a buy on the moving averages. And that is, of course, if you look at the back from 11th of March, it gained quite decently. Then we did see a bit of a tumble here all the way back to 123, even after it was up in 150. That is, of course, a bit of a tumble. It was on the way to do a golden, it just did the golden cross here on 26th, and then it returned, of course, downwards. And then today with this minus, what was it, 12%? Yeah, minus 12%. And now it is a bit further below, and chances are we're gonna maybe see a golden cross in the future, unless, of course, this 50-day and 200-day moving average move further apart. We can also see that it is a minus in the aftermarket. So that was my stock analysis on Apollo Global Management. Now, if you did like this video, please don't forget to like and subscribe.